Tired of dropping your phone or struggling to prop it up? Meet the PopSockets phone grip with expanding kickstand in black, your new must-have accessory. Don't miss out. Grab yours today. Click the link in the video description to shop now on Amazon.
What's brewing in the markets? Well, it's a double whammy of risk for investors, folks. We're seeing a dip in the Dow Jones and Nasdaq 100, and I'm here to break down why. It all started with the Bank of Japan, or BoJ. The board members were discussing a near-term interest rate hike, which is no small thing. In fact, it's got global markets on edge. The BoJ's summary of opinions revealed that board members weighed in on a potential rate hike. But here's the thing, 4 out of 9 policymakers leaned hawkish, while only 2 dissented from the previous decision. Now, you might be wondering why this matters. Well, it's because the BoJ's rhetoric quickly ripples through global markets. We saw that last July when they unexpectedly raised interest rates and reduced their purchases of Japanese government bonds. It triggered a yen carry trade unwind, leading to margin calls and a slump in the Nasdaq Composite Index. Fast forward to this week, and we're seeing similar signs. The BoJ's near-term rate hike talk is denting sentiment, with the Nikkei slipping alongside U.S. futures. And let me tell you, that's got investors getting nervous. The USD-JPY pair is a key area to watch here, as it's got the potential to trigger another yen carry trade unwind. But that's not all. We're also seeing China's manufacturing margin pressures return. The rating dog manufacturing PMI increased to 51.2 in September, but rising input price inflation and falling average selling prices are signaling renewed margin pressures. And let me tell you, that's got investors worried about job losses mounting. And if that weren't enough, we've got the U.S. stock market watching the BoJ's every move. The Dow Jones E-mini fell 20 points, the Nasdaq 100 E-mini dropped 13 points, and the S&P 500 E-mini declined 3 points in morning trading on Tuesday. It's a cautionary tale of how quickly risk sentiment can turn. So what's next for the markets? Well, that depends on U.S. labor data. Economists forecast JOLTS job openings to drop from 7.181 million in July to 7.1 million in August. A sharper drop would indicate weaker demand for labor, supporting a more dovish Fed rate path. But a higher reading could weigh on U.S. stock futures ahead of Friday's U.S. jobs report. As always, traders are keeping an eye on the BoJ's policy outlook, FOMC members' commentary, and U.S. labor market data. Markets enter Q4 at a crossroads. Will it be a yen shock or a Fed cut that defines sentiment? One thing's for sure, only time will tell. That's all for now, folks. Thanks for watching Voro's take on the markets. If you want to stay ahead of the curve, make sure to follow us on social media and check out our live coverage of the markets.